go. We pulled it straight from the lender's mouth, per se. An FHA loan is regulated and insured by the U.S. Federal Housing Administration and issued by an approved mortgage lender. FHA loans are designed to help low to moderate income families achieve home ownership, and typically they require a lower minimum credit score. A lower minimum credit score. So here's the thing. A lot of first-time homebuyers will use an FHA loan because FHA loans have an easier ability for you to get approved, for you to be able to purchase. Okay? And what that means is maybe you don't have a ton of credit yet. We just heard from another one of our agents in the office that the buyer couldn't get approved because they didn't have credit. They had no credit yet. So here's the deal. Maybe you don't have a ton of credit yet. So an FHA loan will allow for you to be able to do that because your credit score is going to be lower. You do have credit. You have the ability to buy, but you don't have a ton of credit yet. So you have a lower credit score. Okay? So you use an FHA loan. Also, FHA loans allow for you to come in with less down payment, and they allow for you to make a lesser amount of money to be able to qualify. But that also impacts where you're buying your property. Now, don't get me wrong. There are high worth buyers that will use an FHA loan. Well, why would they do that? Because the program just makes better sense financially for them. It just is a better interest rate. It's a better this. It's a better that. The fees attached to it are lesser or more than the other programs that they're looking at. So that is why we say FHA is not a first-time homebuyer program. Generally, most first-time homebuyers use FHA loans. Generally, altogether, they do. So